All right, let's jump right in. Today, we are breaking down the new Global Sustainability Assurance Standard, ISSA 5000. And look, for practitioners like us, this is not just another update. It's a pretty fundamental shift in how we have to think about risk, how we evaluate policies, and how we assess internal controls. So let's dig into what this really means for you and your practice.
Okay, so here's our game plan. We're going to start with the big picture, the new assurance landscape. Then we'll dive into 3 really critical shifts: how we look at risk, this new focus on reporting policies, and how the work you have to do on internal controls really scales up. And then we'll wrap it all up by looking at why these changes were made in the first place.
You know how it's been for years, right? Sustainability reporting has just exploded, and we've all been trying to navigate this patchwork of different standards. It's created a ton of inconsistencies and a real need for one single global benchmark we can all rely on. Well, ISSA 5000 is basically the answer to all that chaos.
And just so you know, we're not just pulling this stuff out of thin air. Everything we're talking about today comes straight from the horse's mouth, the IASB's own basis for conclusions. This is the document that explains their thinking, the why behind every single major change. It's our guide for this whole explainer.
So the big mission here, it's all about unification. The IASB's big decision was that ISA 5000 has to apply to all sustainability assurance engagements, no matter what the subject is. So whether you're looking at greenhouse gas statements, which used to be under ISAE 3410, or these huge, broad ESG reports, it doesn't matter. There is now one rule book to ensure everything is high quality and consistent everywhere. Now, let's get into the first really critical change in ISA 5000. And trust me, this is a big one. It's all about how we approach risk assessment. This is really where the difference between limited and reasonable assurance starts to get crystal clear. Before we get into the new rules, just take a second and think about how you do things now. When you're scoping out an engagement, where do you point your risk assessment procedures? Because ISSA 5000 now has a very, very specific answer, and it all depends on the level of assurance you're providing. And here it is, laid out plain and simple. For a limited assurance engagement, you're assessing risk at the disclosure level, so you're looking at the individual disclosures themselves. But for reasonable assurance, you have to go deeper. You're assessing risk at the assertion level for each of those disclosures. That means you're digging into the underlying claims. Is it complete? Is it accurate? This fundamentally changes how we plan our work. So why the change? Well, the IASB's logic here is pretty brilliant. By focusing limited assurance at the disclosure level, which is kind of like how ISAE 3410 worked, they think it creates a much stronger foundation for our work. It's meant to drive consistency, give us a basis for more meaningful assurance, and this is key, it's actually supposed to make the future jump from limited to reasonable assurance a much smoother ride for everyone.
Okay, next up is a new layer of work that's going to feel really familiar to anyone who's come from the financial audit world. ISSA 5000 is telling us we have to go beyond just checking if the reporting criteria are suitable. Now, we have to dig deep into the company's specific reporting policies.
Let's be really clear about the words here, because this distinction is absolutely vital. The criteria, that's the higher-level framework, like GRI or IFRS S2. But the reporting policies are the specific choices the company makes to actually follow those rules. Think of it this way. The criteria might say, report on water consumption. The reporting policy is where the company defines what water consumption actually means to them, which sources are included, and the exact method they use to calculate it. Those are the policies we now have to get our heads around. So, what this means for us in practice is a clear 3-step job. First, we have to understand these policies. Second, we have to find out the reason for any changes they've made. And third, we have to evaluate if those policies are even appropriate and consistent. The IASB has said this is intentionally designed to be just like how we handle accounting policies under ISA 315. It's bringing a whole new level of audit discipline to this space.
Let's move on to the super important area of internal controls. One of the biggest priorities for the IASB was to clear up exactly how much work is required here. And the new standard gives us a really clear framework for how that effort scales up when you go from a limited to a reasonable assurance engagement. This table just makes the difference totally unmistakable. For limited assurance, your focus is pretty narrow. You really only need to understand the controls you're actually planning to test. But for reasonable assurance, your scope gets way, way broader. You need a much wider understanding of all the control activities so you can properly assess risks at that deep assertion level we were just talking about.
And here is a huge addition that applies only to reasonable assurance engagements. There's a new requirement to specifically go looking for the risk of management override of controls. And the IASB's reasoning is pretty straightforward. Since controls over sustainability reporting are often way less mature than financial controls, the risk that someone at the top could just bypass them is way higher. This is a major area of focus you just can't ignore.
Okay, so we've covered these big shifts in risk, in reporting policies, and in internal controls. So let's kind of step back and pull it all together. What was the strategy here? Why did the IASB make all these specific and, let's be honest, more rigorous changes?
When it comes right down to it, these changes are not random. The IASB is playing the long game. They're trying to build a future for sustainability assurance that's more robust and that can actually scale. The whole goal is to drive up quality and consistency, to give users assurance that actually means something, and to create a clear path for engagements to grow from limited to reasonable assurance as the market demands it.
Which, of course, leaves us with one final big question. ISSA 5000 was designed to bring clarity, right? But by defining all this work with so much more precision, it's also added new layers of complexity. So the question for all of us as practitioners is this: is the line between limited and reasonable assurance actually becoming clearer, or is the path to get from one to the other just becoming more complicated? That's something we're all going to be figuring out as we start putting this new standard into practice.